Well, Ridham Desai, the well-known strategist here in India from Stanley, has been bullish on India, and he's been constantly writing about various strategy reports as to what should be the way ahead, how the theme is changing in the market. He's written an important strategy note talking about India playbook, and what he's saying is that markets are vulnerable. They will be volatile after this sort of a move, but any correction is something which will be a buying opportunity for long-term investors. They are advising their clients that declines should be used as an opportunity to buy. So some of their key arguments are that recovery will continue to happen. The worst in terms of earnings downgrade is now behind, and that's why they believe things will continue to move ahead. When we just talk about what they are saying in terms of broader market, they expect the rally to get broader from here on. That's one of their key thesis, which is a recent thesis which they continue to maintain in this sort of an environment. What they are saying is that the money supply in the market has been high, global recovery is strong, so is the macro recovery, and they expect that earnings downgrade which have happened are worst in terms of what could have happened, and that's why they do not expect any major earnings downgrade to come in. The rally will get broader as the large cap continues to move, and that's why they are moving now their call from a macro basis earlier. So what the macro basis call means is that markets would go up and macro data would tend to support it. But now they are moving it to a stock specific basis, which means that global markets may rally or not rally, but they believe stock specific action, stock specific theme is something which investors to focus on. They have not gone ahead and defined their target, but they are saying that any buying opportunity, especially in the cyclicals, will be a buying opportunity. Now there are two sides of the market. One is cyclical and one is defensive. What they are saying is that they prefer cyclicals versus defensive. Why so? Because valuations in cyclical are not particularly demanding, but on the other hand, valuations in defensives are particularly demanding, especially after the recent rally which you have seen in some of the defensive names, and that's why they would like cyclicals. But within cyclicals also, they have moved their stock specific, theme specific call for their clients. Now when we talk about the themes that they like, so they like agriculture, they like manufacturing. These are some of the key themes that they particularly like. Now agriculture, we all know about the rural spending, how it has been growing, rainfall has been good, and that is a theme which they would like to play, or their investors, they advise their clients to go ahead and play in this particular theme. Second is the manufacturing. We already spoke about cyclical. So cyclical industry, depending on the capacity utilization, which is directly depending on demand and manufacturing, and that they believe will see a flip. Now they continue to say that government has taken a lot of measures. These measures will lead to GDP growth. Right now the money supply is strong, but global markets have done well, and that's the reason why even Indian equities has rallied. But from now on, growth will pick up, and that is something which is their base call, which will lead to a broader market rally. A lot of measures have been taken place, whether you talk about supply side issues, demand side issues, various changes in policy, and all of these are some of the things that will continue to drive the broader market. Just to sum up, they prefer cyclical versus defensives because defensives have high valuation. On the other hand, they believe cyclicals are attractively valued considering their growth.